So this is another class from single entry system. This is a conversion of single entry, conversion of single entry to double entry system. So this is in the previous single entry problems we have seen that we find out profit by comparing the opening capital and closing capital. So in that problem we are not able to find out the gross profit and other things. So for that purpose we will prepare this sort of the mechanism to find out the gross profit and other accounts. For this purpose we have to do some we have to calculate some accounts, find out some missing balances. In this way we will prepare the total debtors account, bills receivable account, total creditors account, bills payable account, and cash account also sometimes. And this formula gross profit and cost of goods sold to find out the missing opening stock or closing stock and purchases. So first we will see this is the formula of gross profit. It is given in the fundamental books, and it is a fundamental accounting principles. Gross profit is equal to sales minus cost of goods sold. So gross profit is equal to sales minus cost of goods sold. So sales is equal to this sales means sales minus sales returns. Okay, this sales indicates the net sales. Sales minus sales returns. Sometimes sales returns may give or may not give. So whatever given in the problem we will take as a sales. So this cost of goods sold. So here cost of goods sold is equal to opening stock plus purchases plus direct expenses minus closing stock. In this formula we are always given the opening stock and purchase and closing stock. Direct expenses may be given or may not be given. Sometimes we will give in the question direct expenses, sometimes it may not give. So this is basically opening stock plus purchase minus closing stock we will take. But from direct expenses also including this formula opening stock plus purchase plus direct expenses minus closing stocks. So these four accounts we have to prepare: total debtors account, bills receivable account, total creditors account, and bills payable. These two accounts are related to assets. Total debtors and bills receivable are assets. Total creditors and bills payable are the liabilities account. So we have to prepare all these accounts. So we will see each account individually one by one. So this is the format of our total debtors account. In this, the first one is the balance. Balance means it is the balance. It is the opening balance of the total debtors accounts. Debtors are nothing but who will purchase our goods from our business and will pay money later. So they are called debtors. So this is the balance. So next, credit sales. So debtors means those who purchase and credit sales. So this next comes credit sales. So if you sell any goods and credits, that comes to on this side. So next, bills receivable dishonored. If bills receivable you will take from the debtors and that bills receivable are dishonored by them, so that we will write on the debit side. Bills receivable endorsed. If we endorse the bills receivable to our creditors, so that will come to on this side. This will come this side. Balances, credit sales, bills receivable dishonored, bills receivable endorsed. So to this side by cash. So if any cash is paid by the debtors, we will write this on this side. If they issue checks, cash may include cash and the checks. If they issue cash, if they issue checks, that will also come on under this side, this section. So next, bills receivable received. So if the debtors issue bills receivable, that will also come on this side. So next discount allowed. So discount allowed means if the bills receivable pay amount in time, we will allow them some discount. So it is a loss to business, so that will write on this side. So same in the returns inwards. So if you debtors who purchased goods on credit may return some goods that comes under this returns inwards. Next, bad debts. This bad debts means those who purchased on credit are not able to pay any amount, so that is called a bad debts, that we will write this side. Next, the balance. This is the closing balance of the debtor. This is about the total debtors account. Next is the bills receivable account. Next means bills receivable account. In this bills receivable accounts, first opening balance, it is assets, so it is the balance. First we have to write the balance. So, and the second, total debtors account, bills receivable received. This is the year. This year, if you received any bills receivable during this year, so I will write to this debit side. Credit side by cash. So, bills receivable encashed. The bills receivable encashed is written on this side. So, next total debtors. So, bills receivable dishonored. If any bills receivable received and dishonored, that will write on the credit side. Next, total creditors account. Bills receivable endorsed to creditors, then that will come on the credit side of the bills receivable. This is about the brief history of the total debtors and bills receivable account.